So we'll take a look at CCIV again, a stock that's still super new at the public market but was already able to perform an incredible 430% run. As mentioned before, however, it peaked at prices of about $52, still being down almost 64% from all-time highs. So what we are going to do today is give you an insight into what is happening to CCIV's stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so in order to figure out whether CCIV is a stock to buy at the end of this video, it's crucial to first break down the company's business and fundamentals. And in the case of CCIV, we're looking at a company with no real own operations. But what makes the stock so interesting, however, is that Churchill Capital brought Lucid Motors public through a special purpose acquisition company, or SPAC. So with Lucid Motors being another electric vehicle company, the hype around the stock can easily be explained with the general hype around the EV space. And as the EV market is still hotter than ever, more and more car manufacturers are going to commit to switching to non-fossil fuels. With so much hype around the market, however, and we mentioned this before, not only CCIV, but also big names like Tesla have recently undergone a correction. And this correction also is the first of the two main reasons that stopped the stock's incredible run-up. So with investors bidding up the EV sector many times in 2020 and early 2021, it seemed nothing was going to stop this popular investing trend. But rising interest rates and concerns about valuation convinced many it was time to hit the sell button. The other issue was investors selling the news when the rumors of this SPAC's merger with Lucid Motors became fact. That's why the stock, which skyrocketed more than six-fold ahead of the announcement, plunged in late February. Right now, however, the dust has settled on both of these issues. The sector is far from back to its recent highs and major names are starting to mount a rebound. And that includes CCIV stock, as it gets more and more likely for the next trend to new highs to take place. Of course, it may be too early to call the still downwards heading stock price the start of a recovery. Concerns over whether it can beat out incumbents like Tesla and dominate the luxury EV market remain on the table. And in order to accurately predict the future of CCIV at the end of this video, we have to determine its chances against big competitors like Tesla. First, let's look at the side of this argument that's bearish on Lucid's prospects. Recently, a Seeking Alpha contributor made the case why this company isn't the next Tesla. Believing Lucid's destined for failure, the commentator lists many ways why this company won't usurp the top dog. Chief reasons include a more competitive environment, plus its relative inexperience in large-scale production. Given this company still needs to prove itself, both are valid points. Plus, as the bearish commentator pointed out as well, buying in at today's implied post-merger valuation is very risky, given the stock is priced on what could happen rather than what has happened. But all of these bearish estimates assume the same customer group for both companies, which is not the case here. Namely, while Tesla is trying to become a mass-market vehicle, Lucid is focusing just on making electric vehicles for the rich. This could pay off, as current economic factors do not bode well for the middle-income bracket. So to sum it all up, Lucid Motors has huge potential. Buying right now, however, is very risky, which is why we recommend waiting for the first actual cars to be delivered and the following either negative or positive news before buying or adding more stocks. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.